Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 5 to 1 PM on Saturday the 13th of March 2021 and we're going to spend the next few minutes looking at TLT. Wow, well we're here on the weekly time frame and 10-year Treasury just keeps getting hammered. It's just getting absolutely smashed here. We're going to do our basic technical analysis first and Elliott wave analysis like we always do on the channel. So a quick rundown of the chart if you're new here. We've got Elliott wave count, which is all the letters and numbers we've got here. We're just going to clear those out of the way for the moment. We've got 4 exponential moving averages, 10 in yellow, 20 in blue, 60 in orange and 250 in green. We have a volume profile on the right hand side here showing us the peaks and troughs of the buy and sell volume, with the yellow dashed line representing the peak of that, which is our point of control. We have a MACD set to a 10 for the short term moving average, 20 for the long and a 90 smooth, and an RSI set to a 10 close, with a green 30 level representing oversold and the red 70 level representing overbought. So what can we see here on the weekly time frame? We are seeing oversold conditions on weekly time frame that we have. No, we didn't even see it back in 2006, 2008. As far back as I've got price data here for the TLT, we've never been this oversold before. So a really brutal drawdown here in bonds. And they just keep selling off. I mean, we're below the 10 exponential moving average, below the 20, below the 60, with the 10 and the 20 having crossed through the 60. We're now below the 250, with the body of the candle for the week closing below the 250 exponential moving average, with the RSI now reaching 16.88. No sign of the bullish divergence between the two lows like we saw back here, this low and then a lower low, but a low and a higher low in price. So we've seen it. Yeah, I think if you go back and watch my previous video on TLT, you'll see where I discussed this pattern time and time again, where we get a low and then we get a lower low in price, but we get a low and a higher low in RSI. You know, we see this all the time. Back here we get a low in the RSI, and then we get another low in price, but we get a higher low in RSI, so on and so forth. No sign of that yet on the weekly time frame. So if that pattern were to play out, we would see a rally in price and then another lower low, and then that would translate into a low and then a higher low in RSI, and then we could have confidence that the same pattern's played out and we've got a bottom and we're going we're going back up in bonds. But for the moment things are looking bearish as hell. The yields just continues to climb. We are at a higher yield for the 10-year Treasury now than we were in July of 2016 and February of 2015, and we have. I mean, try and think of the difference in conditions with what we've been through. Okay, so interest rates continue to climb here in the bond market, and yet stocks continue to push to new highs. I mean, the disconnect just continues, doesn't it? Continues. So anyway, let's carry on with what we're doing here. So there's daily time. A bit sluggish today. Internet's playing up a bit. We had a power cut here last night and been having an internet connectivity issue. So let's have a look at the daily time frame. So yeah, 10 below the 10, below the 20, below the 60. 60's crossed over the 250 of the exponential on the daily time frame, and the 250 is now trending down on the daily time frame as well. Gap down on the open of the Friday of last week, a gap down on the Friday and closing red for the day as well. Now, some hope to be had here though on the daily time frame. We do have, for the moment, if we come up to close this gap here, I know it's small at the moment, let me just zoom in. So if we come up and close this gap here next week, then we will have that bullish divergence between the low and the higher low on the daily time frame, not on the weekly yet, but on the daily. So for God's sake, there must be a rally sooner or later. There has to be a bounce here sooner or later. We've got bullish divergence here if this is a low, and we come up to close this gap. If we pivot here back above this low, then yes, we can probably say that we've got bullish divergence and we're going to move higher. But I said that just a couple of weeks ago with this bounce, and it didn't happen. So let's bring up the daily wave count. Give it a second. The chart is really struggling to load everything at the moment. I'm not quite sure what's going on. Let's just come down to the hourly and see if that trips it. Bear with me one moment. Bear with me. I'm just going to try and sort this out. Right. Just give me a minute. I've just realised an issue and I need to resolve. Sorry about this, guys. I'm just testing my internet connection here. Okay, right. That might improve things. Okay. Right then. Sorry about that. Let's get back to it. Here we go. Right, there we go. Sorry, I was just checking, switching over to a hard line because I've got multiple computers up here in the office. I was just switching over to a hard line from the Wi-Fi because I think it's just a Wi-Fi problem. So that seems to resolve the matter. So ABC from a wave 1 top is what I'm looking for here. So an A we got, a B we got, and a C we're working on. So even though I sound surprised by the sell-off, and I am, I'm still expecting, from a technical point of view, I'm still expecting it to go a little lower. I am expecting it to go to 1-to-1 parity, right? So this is why we put it on the chart. So here we are, 1-to-1 parity, wave C, parity to A at 131.09. So by my own reckoning, even though I'm surprised by the levels that bond yields are reaching in the 10-year, I'm still actually, from a technical analysis, which is what I focus on, I'm still expecting it to go lower. So how do we have to count this now? Well, I think we have to count the blip that I saw as a potential bottom into this support zone here. I think we have to count that as a 3-4. Now, it's possible that it's another expanding pattern and it's an A, B, C into a 3-4. Like this, and then a fifth wave to come down lower, right? Or it's possible it was just over in a flash and we got rejected at the 20 and we already started selling off, in which case another 5 waves down, into where I was expecting to find parity at 131.09. So we're not that far off. We're at 136. This would push the yield up a little higher for another week, maybe another week or two tops, I reckon, and then we should be finding a bottom down here at some point, 131.09. And you know, and this is the bond market we're talking about. You know, this is not some kind of crazy ass crypto market, and we'd be looking at a 26.9% correction in the 10-year yield price. Pretty phenomenal considering the conditions we're in. So that is it in the short term. There's nothing else to dig into here, guys, at the moment. The same count I've been working on. I'm still expecting parity. We're just not getting the bounce in the shorter term. I was expecting to see a more time-consuming wave 4 here. A, B, C could still happen, but I think we've got to assume that this is a 1, 2, 3, 4 coming down into a fifth, looking for parity with the A, looking for that target of 131.09. If we bounce from here in this bullish divergence to close this Friday gap, and we do get a bounce from here, then the invalidation point is still the wave 1 low at 149.98. That would confirm a reversal bullish trend to the upside, as well as crossing over all these moving averages and getting a 5-way structure at the bottom here, which invalidates that low. If we continue down, there's our target at 131.09. So that's all I've got for you guys on TLT. There's nothing really changed at the moment. Bond prices continue to get walloped. Yields continue to rise. That's it. It's a save chart. Right, if you're new to the channel, if you like what you've seen here, please subscribe, smash the like. Let us know what you think in the comment section below if you want to. And take care, guys. That's probably it for the week now. I might find time to cover the stock market, but I'm still in the process of updating counts after my bearish counts getting invalidated. So, and I've done a lot of videos already this weekend, but I'll get round to it if I can. Take care. See you soon.